What if I told you that investing in the stock market could change your financial future forever? But here's the truth. Most people never start because they think it's too complicated or too risky. And that's exactly why they stay broke. But guess what? The wealthiest people in the world aren't working for money. They make money work for them. And today, I'm going to show you exactly how you can do the same. Even if you're starting with just a few bucks. Stay with me till the end, because the last tip could be the difference between an average investor and a future millionaire. Let's start with the basics. Imagine the stock market as a giant marketplace, like Amazon. But instead of buying gadgets, you're buying ownership in companies. Every time you buy a stock, you own a tiny piece of that business. And as the company grows, so does your investment. But here's the thing. Many people treat the stock market like a casino, chasing hot stocks and hoping to get rich overnight. That's a rookie mistake. The real key to success? Thinking long-term. Quick question. If you had invested $1,000 in Amazon back in 1997, how much do you think it would be worth today? Over $1 million. That's the power of long-term investing. So, how do you get started? Let's break it down. Step 1. Choosing the right investment account. Before you even buy a single stock, you need an account. The two best options? A brokerage account or a retirement account, like a Roth IRA. If you're planning for the long haul and want tax-free growth, a Roth IRA is gold. But if you want access to your money at any time, go for a regular brokerage account. Platforms like Robinhood, Fidelity, or Charles Schwab make it insanely easy to start investing, even with just $10. Step 2. Understanding stocks versus ETFs. Now that you have an account, what do you actually invest in? You have two main choices: individual stocks or ETFs, exchange-traded funds. Buying a stock means you're putting your money into a single company, like Apple, Tesla, or Google. But here's the problem. What if that company tanks? That's why beginners should consider ETFs, which are like a bundle of stocks in one. Imagine instead of betting on one horse in a race, you bet on the whole track. ETFs like VOO, QQQ, or SCHD spread your risk while still giving you solid returns. Step 3. The power of compound interest. Here's where things get exciting. When you invest, your money doesn't just sit there. It grows exponentially thanks to compound interest. Let me put it this way. If you invest $500 per month in an S&P 500 index fund for 30 years at an average 10% return, guess how much you'd have? Over $1 million. That's the magic of letting your money compound over time. The earlier you start, the more you gain. Waiting just 5 years could cost you hundreds of thousands in missed returns. So the question is, are you going to start today or wait and regret it later? Now, let's talk about what not to do. Here are some common mistakes that can destroy your wealth. 1. Panic selling. The market will crash. It always does. But guess what? It always recovers. Those who panic sell during downturns end up locking in their losses. 2. Trying to time the market. Even the best investors in the world can't predict market highs and lows. Instead, use dollar cost averaging, where you invest a fixed amount consistently, rain or shine. This smooths out your risk. 3. Ignoring fees. Some brokers and mutual funds sneak in hidden fees that eat away at your profits. Always check the expense ratio before investing in an ETF or mutual fund. Lower fees mean more money in your pocket. Final thought. Patience pays off. Investing isn't about getting rich overnight. It's about building wealth over time. The biggest secret? Start early. Stay consistent. And let time and compound interest do the heavy lifting. Here's a challenge for you. Open an investment account today, even if you start with just $10. Because 5 years from now, You'll either look back and say, "I'm so glad I started," or "I wish I had." Now, here's what to do next. Drop a comment below and let me know. Are you already investing, or are you just getting started? And if you found this video helpful, don't forget to smash that like button and subscribe for more wealth-building strategies. Also, check out my next video, where I reveal the top ETFs for long-term wealth. You don't want to miss it. Until next time, keep investing, keep growing, and I'll see you in the next video.